All right, everyone. Thank you for joining me tonight. We are going to discuss the 2022 W-4, and I'm going to show you a little bit about the tax withholding estimator website, which I'll have to do another video again, actually walking you through the tax withholding estimator website because it is right now currently down for maintenance. So without any further ado, let's go to the tax withholding estimator website. And I will put this link in the show description below. So the IRS takes the tax withholding estimator website down usually the last day or two, business day or two of the tax year. And it's down usually for about 4 to 5 weeks. And it's down every year to update the tax tables and make other adjustments. So before you begin using the tax withholding estimator website, you need to gather your most recent pay stubs for yourself, and if you're married, for your spouse too. Gather information for other sources of income that you may have, and that could be sole proprietor, it could be a business, it could be dividends, it could be any other income that you have, and have your most recent income tax return handy. Keep in mind that the tax withholding estimator's results are only as accurate as the information that you enter. So if you don't enter all of the information, you're not going to get very accurate results. So if you have a salary, an hourly job, collect a pension, the tax withholding estimator is for you. It's a self-service tool you can use to complete or adjust your Form W-4 or W-4P to help you figure out the right federal income tax to have withheld from your paycheck. Why use the estimator? The IRS encourages everyone to use the tax withholding estimator to perform a paycheck checkup. This will help ensure that you have the right amount of tax withheld from your paycheck. There are several reasons to check your withholding. Checking your withholding can help protect against having too little tax withheld and facing an unexpected tax bill or penalty at tax time. The IRS does assess underpayment penalties. So if you owe too much and it could have been fixed on a W-2 or by paying estimated taxes, the IRS does give you a penalty for that. I learned that firsthand one year. That was not a fun year. Because I did not use the estimator. So I want to make sure that everybody knows how to use this because it's going to help save you a ton of money and hassle. At the same time, you may prefer to have less tax withheld up front so you receive more in your paycheck and get a smaller refund at tax time. The IRS really wants you to be as close to zero being paid in and as close to zero being refunded as possible. Especially, it's especially important these last couple of years and probably for years into the future because the IRS is behind in getting tax returns processed and getting refunds issued. Yes, you do get your refund eventually and they pay you interest from the time that your return was filed until they get your refund issued, but it's not that much. And I'd rather have my money and not leave it in the government's care. So when should you use the estimator? If you changed your withholding for the year, the IRS reminds you to be sure to recheck your withholding at the start of the next year. A mid-year withholding change may have a different full year impact. So if you do not file a Form W-4 with your withholding might be higher or lower than you intend. Also, if you had a major life change, such as marriage, the birth of a child, adoption, or you bought a home, you'll want to run your numbers through the tax estimator. If you have additional questions about your withholding, consult your employer or a tax advisor. And most employers are going to tell you that they don't have your full tax situation and they're not going to be able to help you. I know when my clients' employees come to us and say, my I don't think my withholdings are right. I have too much or too little withheld on my paycheck. And they want me to help them fill out a W-4. I cannot help them because I don't have their whole tax situation. So the appropriate person to, if you have questions about your withholdings or you want to make sure that things are right, is to consult your tax advisor. So to change your withholdings, based on the findings of the tax withholding estimator, you're going to need to complete a new W-4. And I'm going to walk you through a little bit of the W-4 and the W-4 instructions, because it's important to understand how to fill out a W-4 and what everything means. But if you have complex tax situations, you're definitely going to want to talk to your tax advisor, because even the tax estimator might not be able to help you figure out how much you need to have withheld from your paycheck. And the tax withholding estimator does not ask you to provide sensitive information such as your name, social security number, address, bank account. It doesn't ask you for any of that. You purely put in your salary, your income from other sources. I'm just trying to remember what it asked me when I did the video last year. But it didn't ask for anything that could ever potentially identify you. So if you find yourself at a site that is asking for all that stuff, stop and do not proceed. You're not on the IRS website anymore. All right. So I am now going to share the W-4, and for some reason that is not coming up as an option. So I'm just going to share my whole screen, which I don't necessarily like to do because even if you have everything all set up, sometimes something else shows up. And since I am recording these live, I don't want to have surprises. All right. So in the upper right-hand corner, it says that it's the W-4 for 2022. If you are filling out a new W-4 and you want it obviously to be effective going forward, you want to at least have the current year W-4 that you're doing. I've seen people submit with new hire reports. They got their first new employee in 2017, and that's the W-4 that they've been giving everybody, no matter when they were hired. You always want to make sure that if you're filling out a W-4 for the first time or for a new one, you want to make sure that it's the current year. And then here, pretty self-explanatory. First and middle initial, last name, social security number. They hide it on here. I can't even tell you how many W-4s our firm gets where the social security number is not filled out, because at first when I filled one out for myself, it hides. You don't really know that it's there, but it is. It's under the year. Address, city, state, and zip code. Part C, are you single or married filing separately? Are you married filing joint or qualifying widower? Are you head of household? Only check one of these. And the only real advice that I can tell people is if you want to have the most taxes withheld, file or mark single. If you want to have the least amount of taxes withheld, file married, filing jointly, or had a household. And you really only have to fill out steps 1 and step 5 for the W-4 to be considered complete. Steps 2 through 4 only need to be completed if they apply to you. Otherwise, skip to step 5. And I'm going to read the instructions on page 2 where it goes through what all of these mean. But step 2, multiple jobs, or if your spouse works, you want to check the box right here. So if there are only 2 jobs total, you may check this box. Do the same on Form W-4 for the other job. This option is accurate for jobs with similar pay. Otherwise, more tax than necessary may be withheld. But let's go down to the instructions for step 2. Use this step if you, 1, have more than one job at the same time, or are married, filing jointly, and you and your spouse both work. Option A, most accurate, calculates the additional tax you need to have withheld, while option B does so with a little less accuracy. If you and your spouse have a total of only 2 jobs, you may instead check the box in option C. The box must also be checked on Form W-4 at the other job. If this box is checked, the standard deduction and tax brackets will be cut in half for each job to calculate withholding. This option is roughly accurate for jobs with similar pay. Otherwise, more than necessary tax may be withheld, and this extra amount will be larger the greater the difference in pay between the 2 jobs. Caution, multiple jobs. Complete steps 3 through 4B on only one Form W-4. Withholding will be most accurate if you do this on the Form W-4 for the highest paying job. Okay. So option A is to use the estimator at irs.gov W-4 app for the most accurate withholding for this step. Or B, use the multiple job worksheets on page 3 and enter the result in step 4C below for roughly accurate withholding. Or C, if you have 2 jobs, check this box. And tip to be accurate, submitted 2022 Form W-4 for all other jobs. If you or your spouse have self-employment income, including as an independent contractor, use the estimator. So the worksheet on page 3 is, again, I feel is pretty self-explanatory, and it's totally optional. You do not have to do this. If you choose the option in step 2B on Form W-4, complete this worksheet, which calculates the total extra tax for all jobs on one Form W-4 withholding to be most accurate. Complete the worksheet and enter the result in W-4 for the highest paying job. Note, if more than one job has annual wages of more than 120,000 or there are more than 3 jobs, see publication 505 for additional tables, or you can use the online withholding estimator when it's working. So 1, 2 jobs, if you have 2 jobs or you're married filing jointly and you and your spouse each have a job, find the amount from the appropriate table on page 4, which is here. So it's got a little bit of a tax table included in there. Using the higher paying job row and the lower paying job column, find the value at the intersection of the 2 household salaries and enter the value on line 1, then skip to line 3. So let's just for sake of ease say that the higher paying salary is $60,000 and the lower paying job is 40,000. So we find 60,000 on the higher paying job. We find 40,000 on the lower paying job and put in 4,270 on the worksheet. And this is if you're married filing jointly or a qualifying widower. If you're single or married filing separately and you have a $60,000 job and a $40,000 job, I don't know why my selector isn't working, then here you would choose 7,080. And if, again, same $60,000 job and $40,000 job, but this time you're head of household, you would put in 7,810. So that would be the number that would go here. And then you would skip to line 3 and enter the number of pay periods per year for the highest paying job. So if your highest paying job is every other week, you would divide it by 26. If you get paid on the 1st and the 15th, that's 24 pay periods. So you would divide that by 24. So that's the number that you get on 4 here. You would put, let's just say 70, 80 here, and then you get paid every other week. So 26 pay periods. Then this number is roughly $272. So then that is the number that you would put on step 4C. Right here. I'm hoping this is all making sense. If there's anything that you want more clarification on, please put a note in the comments and I will do my best to answer the questions in the comments of this video. Otherwise, I will record another video that walks you through this if I feel like visual is necessary. All right, so step 3, with doing the step 2, it took us down to step 4, and we completely bypassed step 3 where we claim dependents. So if your total income is going to be $200,000 or less, or $400,000 or less if married filing joint, then you can multiply the number of qualifying children under the age of 17 by 2,000. So if you have 3 kids, you would put 6,000 here. If you have 1 kid under the age of 17, you would put 2,000 here. And multiply the number of other dependents by 500. So if you have a dependent over the age of 17, or if you're taking care of, you know, I really don't do taxes. I don't know what qualifies as another dependent. But let's say you had one of those, so you put 500 here, and then you add those 2 up and you put that. And if you have, so the rest of step 4A, other income not from jobs. If you want tax withheld for other income you expect this year that won't have withholding, enter the amount of the other income here. This may include interest, dividends, or retirement income, or deductions. If you expect to claim deductions other than the standard deduction and want to reduce your withholding, use the deduction worksheet on page 3 and enter the result here. So that is going to be this part here. Sorry, I am still sick. I'm just going to take a drink here. I really try not to do this on my videos because I don't like to watch other people do it. All right. So step 1, enter an estimate of the 2022 itemized deductions from Schedule A. And multiply it by 7.5% of your income. Step 2, enter 25,900 if you're married filing joint or qualifying widower. Enter 19,400 if you're head of household, or 12,950 if you're single or married filing separately. If line 1 is greater than line 2, subtract line 2 from line 1 and enter the result here. If line 2 is greater than 1, enter 0. So let's just say this is $10,000 and this one is 25,900. Line 2 is greater than line 1, so we enter 3 here. And if you have an estimate of your student loan interest or deductible IRA contributions and certain other adjustments, then you have to read publication 505 for more information, and you put some number here in line 4. And I don't know what that would be. And then add lines 3 and 4, enter the result in step 4B of Form W4. And I recommend ask when you're at your tax appointment to ask your tax preparer if you need to do any of this extra stuff. But at the bare minimum, we need to have numbers. We need to have step 1 filled out, which is your name, address, your social security number, and your filing status. And very important, it has to be signed and dated, because a W4 is a form that has to be signed as accurate under penalty of perjury. I declare that this certificate, to the best of my knowledge and behalf, is true, correct, and complete. So they're not valid unless they're signed. The employer only section, this is optional. It doesn't have to be filled out. But if you're using a payroll company and the payroll company is entering in the employees, I highly recommend filling out who the employer section is, because I'll tell you sometimes what happens here in our payroll office is we'll print these, because we do keep a printed copy in our records, just in case of we lose our access to our online systems. And occasionally we'll have it printed out. It'll get separated from the rest of the paperwork for that employer. And then we have to try and figure out who sent it. So if the employer name, and even if it's just the employer name is filled out, first date of employment is super important when it's a new hire, because every new hire report that we file needs to know the date that the employee first worked. And the employer identification number, or EIN, is just one of those super helpful things that for the payroll company. So thank you guys for watching. I really appreciate it. And I apologize again for coughing and needing to take a drink during this. And if you find value in this, please like and share, get notifications when I do these live, because I don't do them at any set time. And if you find value, definitely please share these videos with your friends, and we'll